and welcome to our latest virtual roundtable brought to you by Bridging Commercial and kindly sponsored by Precise Mortgages. Thank you very much for joining us this morning. My name is Beth Fisher. I'm the editor at Medianett, the publisher of online titles Bridging Commercial and Development Finance Today and the bi-monthly print Bridging and Commercial magazine. Today, we will be discussing whether a 2-week completion is necessary in bridging. According to the little data that we have on the market, it is accepted that average completions have climbed over the past few years or so, which has made many question in the industry why things are taking longer. Bridging has always been about speed, but the parameters of what constitutes as speedy has undeniably changed from what may have been considered 10 years ago. The entire industry has evolved over that time, and therefore can we expect the same timeframes of yesteryear when today we have a completely different customer profile, we've got a variety of uses for bridging and also a more diverse range of lenders. For example, the time it takes to complete a vanilla deal that uses AVMs or dual rep, that can't be compared with a complex case that involves multiple ownership structures, for example. Bridging has historically been regarded as emergency funding and is often used for chain breaks and auction purchases, where time is of the essence. As the market has become more professional and competitive, brokers' awareness for this specialist product has increased. Consequently, customers are increasingly factoring bridging finance into their investment plans rather than as a last resort product. Therefore, bridging is now not usually an afterthought, but something considered in advance, which gives us a bit more wiggle room in times of timeframes. Additionally, not all bridging loans require speed, but are brokers submitting applications requesting urgency when it isn't actually needed? Does this cause a backlog for the loans that actually are urgent, and are borrowers paying extra for unnecessary speed? Earlier this year, Bridging and Commercial magazine explored the industry's obsession with bridging timescales, where we questioned whether a rise in the time to completion has made a bridging a less valuable solution. Considering traditional providers have scrambled to cope over the past 2 years during the pandemic, I would say that this product has been more valued than ever. Something I'd like the panel to think about today is whether we should be discussing and educating the industry more on what bridging actually is rather than what it was. I would also like to know whether the success metric should be on client satisfaction rather than how many days or weeks the loan took to complete. Joining me to discuss what dictates speed and what is causing delays are a fantastic group of experts in the bridging finance markets. So now I'll hand this over to them, and they will each spend around 2 minutes of their time introducing themselves. And I'd like to start with Emily Machin, please.
Good morning, everybody. Thank you for joining with us today. My name is Emily Machin, and I head up the specialist finance team at One Savings Bank, which obviously includes Precise Mortgages as one of our brands, along with Kent and Interbay. I've been with the company for just over 5 years now. But in this role specifically for the last year. So prior to kind of doing this role as heading up specialist, I was in national accounts, corporate accounts. So moving into bridging this time last year was quite a kind of big step for me, because I've never actually kind of come across bridging before. So this year really has really been about kind of learning the ropes, understanding bridging. A lot of the questions that you kind of mentioned, Beth, that we're going to talk about today has been sort of something I've looked at for the past year. And also one of the big objectives we've had is to get Precise bridging back firing on all cylinders, which thankfully just in time for this panel has started to happen, which is fantastic. So yeah, really looking forward to having the discussion today, and thank you to the other panel members for joining us as well.
Thanks very much for that, Emily, and apologies for getting your surname
That's all right.
wrong.
Everybody does, hence why I got married, really, so I can change the name.
Classic Monday brain there. Rob, you're up next.
Yeah, so I need a good chunk of that 2 minutes just to better work out how to unmute myself. So yeah, Rob Jupp, the Group CEO of the Brightstar Financial Group, which, as my screen tells you, involves 2 businesses: Brightstar Financial, that are a B2B specialist distributor, deal with just over 75% of the UK intermediary market on long-term contracts, and that business has been established just 10 years. And Sirius Property Finance, which is a high net worth boutique brand based in the City of London, that business is about 5.5 years old. So I've been in this godforsaken, awful industry now for almost 30 years. I'm surprised I have more hair than Harry does. Bear in mind he's only about 30, but there you go. If I looked as good as him, I'd probably look good without hair like he does. So I ran the trade association for the bridging industry for almost 5 years, in a really defining period of its evolution. We did lots of really good work there to try and help a bit of legacy and long-term benefit for consumers and distributors and lenders. So really interested today. Thank you very much to Emily Machin at One Savings Bank for kindly agreeing to this, and let's get our teeth into some serious and sexy debate, right?
Brilliant. Thanks for that, Rob, and I completely agree. Harry?
Good morning, all. My name is Harry Landy. I'm the Managing Director for Enterprise Finance. I've been at Enterprise since 2001. During that time, obviously, we've had some magnificent highs, a few lows, and things are rising up again. In my time at Enterprise, I've always been involved in the specialist lending space, starting off predominantly in the subprime mortgage world, then moving into second charges, bridging finance, development finance, commercial mortgages, which is where we find ourselves today. It's really been an interesting journey watching the bridging finance world grow, especially if we consider where it was in sort of 2004 and 5, and then where it came to in 2010, where it really started to accelerate at the peak of the financial crisis with the liquidity shortage. The bridging lenders really, stepped up and really used that as a springboard to launch themselves into what, whilst we still call it a specialist product, I think everyone around this virtual table would like it to be discussed as a mainstream product. But I do think we have to remember it is a very niche product that is not going to be fit for purpose for absolutely everybody. And I think the expertise around this table is probably well placed to illustrate those scenarios and the good and the bad. And yeah, is two-week bridging needed? I think it is. So let's see what happens. And Rob, if you want to share any of your hair, all gratefully received.
Thanks for that, Harry. And Jason?
Hi, morning everyone. So my name is Jason Berry. I'm Group Sales and Marketing Director at Crystal Specialist Finance. We're based over in the West Midlands, and yeah, we specialise in all things specialist basically. So although we've got residential and seconds as a product vertical, really bridging, commercial and complex buy-to-let is I suppose where we I suppose have most focus. Bridging probably represents 30% of the total originations we do, so it's a crucial part of the tools we have in our toolbox. We're passionate about bridging. We do feel it's got a real part to play in a marketplace that is going to be particularly buoyant, we see over the next few years. My background is I've led various sales and marketing channels with lenders and also with fintech, and I've been with Crystal for 2 years, and delighted to be here today talking about all things bridging.
Thanks for that, Jason. And last but definitely not least, we have Jodi, who's kindly joined us on her day off today. So Jodi.
Oh, thank you, Beth. Always working, as I'm sure most of the panelists are. I'm Jodi Lund. I am head of the Real Estate Finance Department at JMW Solicitors. So we are a full-service law firm. We've been trading out of Manchester for almost 50 years now, but we also have a London office and a small Liverpool office. Real estate finance team was born in 2018. My history with real estate and bridging and finance goes back sort of 15-20 years, but we decided to form a separate specialist department at JMW for lender services in 2018. based on previous relationships that we had with the likes of Precise and Kent Reliance. So within our department, we cover everything from specialist buy-to-let all the way through to development loans, but we do have a real focus on short-term finance and bridging finance. And we've got a team dealing with that exclusively day in, day out. So yeah, I'll be really interested to hear some ideas today on a 2-week bridging turnaround time.
Thanks for that, Jodi. So now everyone's introduced, I just want to remind the audience that you can submit your questions throughout today's discussion. You can do this in the chat box on the right of your screen. Please feel free to ask questions as and when, and I'll be looking through those throughout, and we'll leave the last 5 to 10 minutes to answer those. So we will kick off our conversation with a bit of data that we've got. As I mentioned at the beginning, we have very little data on the market. Unfortunately, it is highly unregulated. So most of the market isn't regulated. Therefore, it's quite difficult to get accurate information on what the bridging market consists of. So according to Bridging Trends, the bridging completion average is currently at 47 days, and it has been north of 50 for a little while. Emily, do you think that this is reasonable in bridging?
I think you're asking the wrong question. I think it's the wrong person. I think it's down to the brokers to tell me whether they think it's reasonable or not. I think I did kind of have a look at the Precise data just to kind of see where we sat in comparison to that figure, and we're actually sitting on average around about sort of 25 to 30 days. We do obviously have some outliers that that kind of bump that up on occasions. I think it really comes down to why are they bridging in the first place? What's the reason? As you said, if it's an auction purchase, or if they've been potentially let down by a long-term lender and you can't get kind of that long-term finance, then actually, yeah, you are going to need the completion a lot quicker than that. And it's actually, again, checking the data, we have been able to complete stuff within 7 working days on occasions when it's necessary. But I think it's about identifying what kind of applications need that turnaround time and what don't.
Absolutely. I know that, Harry, obviously from the jump, you said that they are necessary for 14-day time frame. So what's your opinion on the current average?
I mean, I can only refer to EFL data, and 40 odd days seemed extremely excessive to me. Our average turnaround time is 29 days here within Enterprise, and I think doing a bridging loan within 2 weeks should absolutely be possible as the norm, provided all parties associated with the transaction are lined up and working together. I think it's also worth recognising, as I think somebody said earlier, not all bridging loans need to complete in 2 weeks. There are lots of cases where time is not an issue. But I suppose one of my big frustrations is where time is of an issue, and there are loads of scenarios that we can point to, loads of case studies that we've got, loads of examples of situations that arise where a quick turnaround is needed. And I do feel that there are parts of the process that potentially let the site down on achieving that target. Because let's be honest, bridging is not the cheapest form of finance. People are paying a premium for this product, and in return, what you should get from paying a premium is a premium service, and that should be delivered. And I know that ourselves as brokers, and I would say that lenders in the main, I would say most bridging lenders are geared up and can deliver within those timeframes. There's some that can't and just will never ever get there because their internal processes restrict them from doing it. But I think that in the main, absolutely, it should be possible, and we can point to it, provided we are told at the outset by both the customer and the broker that introduces us, because all of our business comes from brokers, what the realistic time delivery factor is, or the metric is, and we can deliver it. But certainly we should be able to deliver it. My personal view is, what is the one thing that lets that down? Jodi's not going to like me for this saying. I'd say it's the legal process. I would say it's the legal part of the process, which is the main thing that stops us from delivering on that time frame.
Not surprised that you brought that up, Harry. So I was delighted when I saw you on the panel, because I thought we can have a real good debate on this. Look, I understand where brokers are coming from with this, of course I do. And I think historically, Beth, you're right, it was all about speed. Speed bridging was all about speed. Now, short-term lending isn't all about speed necessarily. I do think it's good to have some sort of benchmark, but I think within, even looking at that data, 47 days, but what does that consist of? Are we talking about development loans? Are we talking about complex ownership structures, as you've said? With a few, with vanilla deals chucked in to bring the average down. It just entirely depends on the subject matter. And I think, talking about legals, people do refer to, legals as a legal black hole. We're battling an archaic system in legals. And, we've lenders and brokers alike, we're all looking at things like indemnity insurance and things that we can do to speed things up. We're always looking at technology and processes to do that. But yeah, the fundamentals of battling a property law system that has been in place for hundreds of years, that is difficult, and we can only move things around that to try and sort of bring those averages down and bring things forward. But it's not always just about legals. There can be things like, Harry, are you told that this property is a HMO at the outset? Sometimes you will be, but on occasion you won't be, and then that's discovered during legals. And then what the client's intention is with the property, then does that turn that deal into what looked like a vanilla remo into something like a something that needs development or heavy refurb, for example, and that just throws in a load more requirements that maybe weren't considered at the very outset. So yeah, I agree with Harry when he says about the brokers need to be told at the outset exactly what that transaction is going to consist of, and if that follows throughout the process, everybody is better equipped then to deal with it, including at legal stage.
Absolutely, and it's avoiding that kind of piecemeal information at the beginning when it comes to applications, which is time and time again mentioned. I'm also interested to know a bit more about, your when you're looking at your borrower base for brokers. Everyone's borrowers and customers are very different. So, there might be brokers who have more vanilla bridging deals coming their way than others, and therefore time is going to be very of the essence to some and not for others. So I think that's also worth pointing out. Rob, what would you add? Would you agree that the current timescales are reasonable for your customers?
Well, I'm not going to say no, am I? Yes, absolutely. So a number of things. Number one, to Jodi, just to agree the methodology of what the bridging trends data gives, because we're part of that. A number of firms, I know Crystal are as well. Yeah, it includes all terms with 12 months or less. So it will be all of those things you mentioned, which, frankly, a 2-week completion on some of those areas is actually irresponsible to try and get it done that quickly. So yeah, it also includes a lot of vanilla stuff. So that just sort of confirms that. Second thing, look, if a client comes to Enterprise, Crystal or Brightstar, there guys, I've included you as well in that, and needs to get a loan completed quickly, our teams will all get it done, no issue at all. So, there's been press releases by all of us, sharing 2 or 3 day completions from start to finish. It can be done. It's really difficult, but it can be done. So if someone wants it quickly, it can be done, no issue at all. And bridging finance is brilliant for that. I think the big thing for me is not how quickly can it complete, it's how quickly can we get the offer done. Because the bit that we really can only control is how quickly we can get the offer done. So, if you've got the right valuation partners that we all have, and you've got the right process in your team, getting the offer produced really, really quickly shouldn't be an issue. I agree with Harry. I do think that the legal side is still an issue. What I would say in defence of JMW and a few of the other really decent firms is JMW and a few other decent firms are not the problem. The problem generally is on the client side when they deal with utter legal morons who I'm not sure they're even qualified. A local office that probably deals with a few divorces and wills, and all of a sudden is a bridging conveyancer. It's an absolute disaster. They take 100 times longer than they need to. It just convolutes the whole process. And how often do we still get a local solicitor trying to talk a client out of doing a bridging loan, saying, well, you don't want to do this, So I would say it's not the experts that do bridging all day long that the problem. It's the client side, local firms that frankly shouldn't be doing bridging at all. I think it's utterly irresponsible, and I think a lot of the customers are getting absolutely awful advice. But look, I think in conclusion, there's nothing to see here. I don't think there is a problem with bridging timescales. If you have a problem with a bridging timescale with the companies that you're dealing with, you're not dealing with the right companies. Can I suggest to you, if you're dealing with a company of scale that does bridging as part of their basic proposition, we will insist within our SLAs with all our lender partners, of which Enterprise and Crystal would be the same as Brightstar, that we will make sure that we get deliverability on that, because actually if we can't deliver on what we're asked to do, we have no business.
Just picking up on something Rob said then, Beth, if you don't mind. In terms of borrower solicitors, yes, that we get that quite often. We had an example literally last week where a borrower solicitors said to the borrower, do not take out this product, do not proceed with bridging finance. That's just misinformed. As lawyers, we are not there to give financial advice to the borrowers. That's obviously for the likes of the brokers or independent financial advisors. That's not for us to say, but we do see it more often than you'd think. So it's either a straight no, or they struggle with the requirements and with satisfying what is required, because that is not what they are used to doing day in, day out. As Rob said, it could be somebody that's done your grandma's probate 2 years ago and happens to have done a conveyance for you. So it's really important to get the right borrower solicitors on the separate work, definitely, without doubt.
This has been historically an issue that has, it's just continued. I know that we've been reporting on this problem for a long time, and I know some of the associations have had almost like a directory for solicitors that borrowers could use. Are there any other solutions? Because clearly it's not working all the time in terms of being able to a borrower to be able to get a better, more qualified solicitor.
I think it's difficult. I mean, the borrower has ultimate choice. They have the choice as to who they use. You can't, as a lender, you can't dictate that. As a broker, you can't dictate that. As solicitors, we can't dictate who the borrower solicitor is. It will always be helpful if they can have some guidance, and then they have a choice of people that we know or are recognised as solicitors that deal with these kind of issues day in, day out. But again, ultimately the choice is their own. So it's difficult. I mean, there are a couple of lenders at the moment that are thinking about going panel management for a panel of borrower solicitors. That seems to be a thing. It's a hot topic at the moment. That's been discussed with me a couple of times. Obviously, you've got to have that separation when you're on separate work between acting for the lender and being panelized for the lender and separately the borrower, unless you've got a joint rep offering, which we do in certain circumstances. So yeah, it is an age-old problem. And I suppose it's still up for debate as to how that can be solved. Still within the remit of, as I said, the borrower having the freedom of choice of legal representation.
I mean, what I'd say, Beth, is it's not a coincidence, is it, that when, whether it's our business, Rob's or Harry's, actually does communicate to the marketplace that we've done a 5-day bridge, it's not a coincidence that the lawyer's been on side. There's been a clear understanding of what the outcome needs to be right at the beginning. So again, we can't emphasize that enough. So understanding what the outcome needs to be and the timelines that we're working to right up front is absolutely crucial, so we can manage those expectations accordingly. But also, in order to turn it around in 5 days, that collaboration doesn't just start and finish with the broker, and extends to the valuer, it extends to the lawyer, it extends to all parties. And everybody has to pull in the same direction and deliver urgency to get to that turnaround time, but it's not required all the time.
I know we've mentioned legals as being part of the one of the delays in terms of bridging turnaround times. But what are you all seeing? What other issues are you seeing that's causing delays? I know Jodi mentioned earlier about information at the upfront when they're applying for a loan.
Yeah, definitely. I think a couple of things that we see quite often can be, depending on whether you set prep or joint rep, but source of funds issues. You know, if that changes halfway through a deal, that can cause issues. And I think, as Jason was saying, communication. You know, if you've got a chain of communication from broker, packager, you know, valuer, lender, legals, it makes a huge difference. If there are any changes then from the information that you're given at the outset through into legals, you can deal with it, you know, and you can get the broker involved to help sort of overcome whatever stumbling block there is. But yeah, I think definitely accuracy at the outset. I think with some borrowers, perhaps they think they need to present a certain picture, which then at some point will it will translate that that's not the case further down the line, sometimes at legals. But if everything is just transparent from the outset and accurate from the outset, it just makes a huge difference to timescales.
We see the most delays, to be honest with you, Beth. It's not necessarily on the legal side, it's actually with the skills of the brokers who we're actually engaging with. Look, this isn't a core product for them. We know it's not a core product, and all three of us on the call here have spent, or four of us including, you know, Emily, with Precise, we spent an inordinate amount of time trying to educate and inform the broker community so they just get bridging, because it isn't overly complicated. Look, it's more competitive than it's ever been now, which I think is making it a bit more eye-catching. We've got the lowest fees we've ever seen in the marketplace. So I think, you know, it is, look, it's still far from being mainstream, but it's certainly becoming more popular, as probably evidenced with all our volumes as we've gone through this year. But certainly the skills and the level of supplying information quickly and supplying information that you've actually requested from a comprehensive list is still the biggest challenge we get when we're trying to package a case for a broker.
I think that is one of the biggest problems, isn't it? The more we try and mainstream bridging, the more we will get mainstream brokers trying to do bridging, and it you know, we've seen it happen with, you know, complex buy to let. We're seeing it happen with commercial, because we've talked about it for years about diversifying your business. So it's inevitable that you're going to get brokers who aren't familiar with the process, who don't have the, you know, a really high level of knowledge. At Precise, you know, we're happy to take business from any broker. Anybody's welcome to do business with us, but one of the things that we do is obviously have our preferred panel, three of which are on with us now, and that kind of gives brokers, you know, the additional sort of route of saying, well, look, we understand if you don't know how to do this, go and see Crystal, Brightstar, Enterprise, and that they are the experts, and they will help us through. And, you know, I'm sure if we were to look at the data in terms of turnaround times, it would be our preferred panel with the best turnaround times compared to our kind of sort of standard mainstream brokers who do bridging with us.
I'd like to move the conversation more towards what dictates speed in bridging. We all briefly mentioned it earlier, and we were obviously talking about the little data in the market and what constitutes as the average turnaround time, which, you know, includes things like heavy refurb, light refurb, development exits, all things which are a bit more complex than a standard vanilla bridging loan. So let's start with you, Harry. What dictates speed in bridging, and do all loans require a quick turnaround?
So no, in short, not all loans do require a 2-week turnaround or a 5-hour turnaround or whatever it may be. So, but what does, because that's what's important. So I think the biggest group of people that we see utilising bridging finance are property developers, buy-to-let landlords, property professionals who understand the nature and structure of the product and use that as part of their armory, if you like. And one area we see is people who are in contract race. You know, it's a super competitive world in terms of development. So I want to buy that house because I can turn it into 6 flats or 8 flats or whatever it may be. But there's 5 other developers on the street who are also looking at the same opportunity. So I want to move quicker than them. And because I've done bridging finance before, and because I work with a specialist distributor like the people around this table, I know that together as a team, we can, if everyone's interests are aligned and everyone working together, get it done in that quick time scale. So property professionals, historically for me, have always been the guys who wanted to get things done quickly, get in there, start work on the property, demolishing, refurbishing, whatever it may be. Over the last 18 months or so, or since the end of lockdown #1, there's been a new group of people who've come to the table with a desire and need and urgency. So obviously lockdown dramatically changed the way in which people are living and working. You know, all the working from home stuff has become more mainstream. As such, people are now deciding to move out of the major cities into more rural environments. So we've definitely seen a big influx of people now who are on that journey. They found a house in the Cotswolds or in Cornwall, Devon, wherever it may be. It's the ideal house. They must have it. Such a great opportunity, and they do not want to miss out on that opportunity of buying it. And so much so, they're happy to use bridging finance to secure the purchase of that new property before their current one sells, because they do not want to miss out on that new property. Now, I'm not saying that has to be done in 2 weeks, but there certainly does seem to be that these people who, you know, it's almost like they've been let out of their house, and there's almost like it's like a fad where everyone wants to say to their mates, oh, we're moving to the Cotswolds, we're moving to, you know, wherever it may be, random obscure place, and they just want to secure that purchase as quickly as they possibly can. Interesting, we've seen people buying places in Wales with campsites attached to it. I don't know, it seems to have been like 3 or 4 of those types of deals. So there is certainly a group of people out there who are seeing this competitive environment. I suppose that's what both these scenarios are, the property professionals and the home movers. They're in a competitive race environment where they do not want to miss out on this opportunity to complete on the purchase of a new property, because it's a seller's market at the moment across the whole UK, whether you're using bridging or residential mortgages or buy-to-lets. It's you know, there's a shortage of stock out there in most areas. So I think that is the reason why speed is of the essence in a number of scenarios.
Rob, how do you differentiate with your customers in terms of speed, whether it's a want or a need?
Oh, it's a really complicated, this one. We just simply ask them the question, you know, how quickly do you need to complete? And bizarrely, they give us the answer that is the honest answer, and then we deal with it accordingly. And I can't think of a scenario where a customer has deliberately lied to us because they want to get a bridging loan offer really quickly. You know, we're mature enough to ask the right questions to get to the conclusion reasonably quickly. But I'm going to answer that question because Harry's killed it for the rest of us, because he's answered it so wonderfully well that all we do is nod our head. So I'll answer a different question, and I think this industry is destroying itself with its short-termism. I think the problem we've got here is this: there is an oversupply of bridging lenders in the market. They're all the oversupply bit is towards the bottom end of the market, where they're juggling for not juxtaposition, they're juggling for business, and they're looking at things in a very short-term way, which is ironic when we're talking about short-term finance. You know, they're just looking to make quick, fast buck. They're looking to try and return perhaps back on funding lines, on PE investors. They're not worried about legacy. They're not worried about the future. They're not worried about customer outcomes. And actually, they're attracting their propositions to brokers that feel exactly the same. They're short term as well. They're not worried about outcomes. They're not worried about customers paying off terms on term and not breaking warranties. They're just after big fat commissions to go with their short term friends that aren't going to be in here for very long. So I'm calling them out, and that's really important. I think there is a nucleus of really good lenders out there, you know, and of course Precise is towards the top of that list as the sponsor of this event. But others, I'll see Harry's eyes flash a minute. West One would be another one that would definitely be up there as well. And you know, these guys are looking at things in the long term. They're not looking at it for a quick, fast buck, get the deals done, you know, get your return, hope that some of it is going to go bad because the margin of delinquency is much higher in terms of earning structure than anything else. This industry is destroying itself in its short-termism, with the lenders at the bottom of it who has simply not got enough business. There you go. There's your headline. I'll put myself back on mute.
I think just
oh, sorry, Jason.
Sorry, I was just going to say, look, I think there's been, you know, various senates or various engagements that we've all been involved in recent months. And what's interesting when you have a conversation with these opportunistic lenders is just how there's no differentiator. So, you know, when you ask them, again, a simple question, how do you differentiate? They're at similar LTVs to regular loyal partners that we've got a relationship with. They're at similar pricing. So how they are actually going to, you know, penetrate and achieve success will be with, you know, largely it will be with those, and there's enough of those brokers who are still finding their way and finding their feet. So unfortunately, some of these lenders are still going to pick up business, which is incredibly frustrating because it's undeserved, and we've just got to hope that they don't receive enough so that they, you know, they hit the wall. But there's no differentiator.
I think what's interesting there, Jason, is that some of these new lenders that you are mentioning, and we've all had them call us and try and take some business, is what is your differentiator? You ask them the question, and the answer that they come back and give you is, oh, speed of service, we're quicker than everybody else, which is ironic. And when you ask them to sort of, you know, explain why they are so much better and why they are so much quicker, there's no real substance behind what they do differently to any other lender. The fact is they've got no deals in, so they can react and respond quicker than maybe other people, but there is no differentiator. And for any brokers out there listening to this today, I think be careful of the bridging lenders that offer deals that maybe seem a little bit too good to be true. You know, the really high LTVs with the really low rates. It's not all it's cracked up to be. So, you know, stick to the tried and tested lenders who've been there through the good and the bad and are still lending and making good credit decisions.
It really goes back down to you know, brokers asking those questions for new lenders that they're working with, and you know, how do they work with clients when they come to the end of a deal, for example, how do they redeem, do they offer extensions, or how are they funded? Those sorts of questions brokers should be asking, and especially new brokers coming into the market and trying different lenders out, as you've mentioned there, Harry. And this kind of moves me on to my next question, which is about rebridging. We obviously get a lot of stories where we've got you know, record bridging turnarounds, 3 days, 5 days, whatever it is, 24 hours. A lot of that is actually on rebridging. So how do you think that rebridging is impacting the speed argument? Jason, do you want to kick off with that one?
Look, I think it's been an incredibly, you know, challenging 18 months, hasn't it, for everyone? We all know the playbook and what's occurred, but ultimately, you know, with bridging, there's nothing more important than understanding the exit. And, you know, that is, you know, as we touched on earlier, when we're trying to really understand what the outcome is right at the beginning, and we're looking at what the specific needs are, understanding that exit is crucial. And you know, I'm actually pleased to see that, you know, the more ethical lenders, bridging lenders out there, have recognised during the last 18 months that circumstances have changed, the market's been difficult, and there are times where there's been an ability to, you know, extend terms at a fair rate, which is, you know, credible. There's also been other lenders who've seen opportunities to actually dive into, offer rebridge facilities that maybe wouldn't have been there in the past. They would have been nervous to actually get involved in the developments. And but if you look at the reasons why an exit fails, it's usually because we've got a supply issue with materials at the moment. So, you know, the building industry almost ground to a halt, as we know, with COVID. So inevitably there were delays to construction. You know, similarly, if you look at those constructions that did complete, you had a situation where we've still got maybe more difficulty in actually selling the properties. So if it was a development that was involving apartments, for instance, then the apartments maybe have not sold at the rate. So I think, you know, probably two things which, you know, I probably emphasise is, look, it's great to see that there's been more flexible terms offered when an exit hasn't been met, and it's also been pleasing to see a competitive dynamic for, you know, bridging lenders wanting to rebridge when there's been maybe a difficult circumstance that's been unforeseen.
Do you all agree that USPs or headline timescales are becoming a bit more problematic than promotional? Harry, should we kick off with you on that one?
Yeah, I mean, look, in some examples, it's just bullshit, right? Because, you know, people are claiming to be able to deliver in certain time frames, but they can't. So putting yourself out there and saying, you know, we're the quickest, we're the best, well, you're not. And it might be their fault, it might be others, there might be outside factors affecting that. But I think, again, if I can only talk about our experience. I know that you know, Rob and Jason's businesses, we all operate in the same way, right? We've been all doing this a very long time. We're experts in our field. We know that when an inquiry comes to us, we know the right questions to ask the customers, which will enable us to place that case with the most appropriate lender for that customer's circumstances. And then I find I would never take on board what a lender says in terms of their published, you know, turnaround deliverables. I would set my own deliverables and say, look, you want to get it done in 3 days? No chance. You want to get it done in 3 weeks? Absolutely, we're going to be able to get that done for you. So I think people in our profession, and I know that I've got lots of brokers we deal with, and I'm sure the other guys have as well, they use my expertise as to what is possible and achievable rather than what's in the press, because, you know, it's maybe there's an expression for it, but yeah, it sounds good, but it's maybe not deliverable.
Emily, how do you normally manage client expectations when it comes to SLAs and headline timescales?
I think it's really difficult because the minute you put an SLA out there, everyone is going to expect you to adhere to it. And then when you don't, whether they need it or not, if you told them that you're going to do it in that time and it doesn't happen, then that just causes, you know, relationship problems. So I think, you know, lenders generally do need to publish some SLAs, if not publicly, certainly with the kind of key partners that they work with, and have, you know, be able to kind of have that two-way conversation. So if it's not working, or if it's not, you know, kind of happening within that published timescale, then you take steps to deal with it and sort it out. I think, you know, certainly on our bridging side, we kind of make a point of not publishing our SLAs, but if you use us enough, you know, you'll come to understand, you know, how we actually work and what timescales we adhere to. And just back on, I think it was Harry that said that, you know, new lenders come out and say, oh yeah, we're really quick, you know, we do it in this amount of time, but a lot of the time they haven't actually researched the market to understand, you know, where they're competing against, and they're saying they've got great SLAs, but actually it's exactly the same as 3 or 4 other lenders, that they haven't actually done the research to understand what they're kind of benchmarking themselves against, which is quite important.
It's also that headline rate, not rate, but I mean that's also another conversation. But headline completion time, that is unlikely to be their average as well. To say, you know, we can complete in 5 days or a week or whatever the case is, that could be their best time, but not their average. And therefore, new brokers who are coming into the market it will make them feel that is the average, and that's the kind of benchmark that they're putting it at, which is would be confusing to any new brokers in the space. Rob, would you have anything else to add in terms of USPs and headline turnarounds?
Not really. I think Harry's done it again. He's just killed the question with his response. He's leaving us nowhere to go here. Maybe one of us could get the answer to answer the question first, rather. I think it's your favourite at the moment, Beth, isn't he? That's what it is. You said. Look, okay. So just coming back to this rebridge question. Look, rebridging is not a good thing for the customer. Let's just all agree with that. If a rebridge opportunity has happened, it's somewhere someone hasn't done their job correctly in most cases, right? As in, either the client has not been accurate with the information he gave at outset, so you know they haven't delivered on the timescale, or the broker hasn't been accurate and hasn't been keeping in touch with that customer, or the existing lender hasn't. Somewhere, you know, something's gone wrong. So I would much rather, now the whole concept of taking a bridging loan and rebroking it out in the market as another bridging loan is an absolute disaster. You know, what you should be doing is you should be going to working with a customer from day one. The day you complete on that loan becomes the first day of that loan. And a really good partner will take that customer through their journey and will deliver on time. If they can't deliver on time, or they feel there's a chance they're not going to deliver on time, they'll contact the lender and go, do you know what? The term finishes in 3 months' time because there's been some really bad weather. The customer is 4 weeks behind their build schedule. They need another 4 to 6 weeks. So in advance of that, can we get support ready to extend the facility by another 4 to 6 weeks? And you know what? Almost every lender we all work with, you know, because they're decent, we have no issue with that whatsoever. But, you know, we see here on our bridging desk, every day, I would say at least 5 inquiries that are for rebridging. And they shouldn't need, because actually, a rebridge is not good for a customer. There's more fees to pay. There's more legal fees to pay. There's more surveying fees to pay. There's more fees. You know, yes, the broker might benefit, and yes, the new lender might benefit, but the customer isn't going to do. So just do your job right. And this goes back to what we're saying right at the beginning. You know, Jason said bridging is easy. Well, at face value, it is. But actually, I think it can be the most complicated product line, because when it goes wrong, because of the cost of credit, it goes horribly wrong to a massive detriment of that customer. So if you're not a bridging expert and you do it every now and again, just don't bother, because at some point you're going to really mess up and you're going to be in a serious hot water. And you know what? Your PI insurer probably isn't going to pay out as a result of the fact that you actually don't know what you're doing.
Thanks for that, Rob. Jason, do you have something to add to that?
Yeah, look, I just think, you know, from a specialism perspective, you know, we encourage, you know, brokers, don't we, to focus in specific areas that they most enjoy or the particular experts in. If they're not an expert with bridging or short-term finance, then, you know, there are people who are. I think that, you know, the rebridging point I was making was more around just the unusual circumstances that we've seen over the last 18 months. You know, what is absolutely clear is that if you look at the lenders, and Precise are obviously one of those, OSB are one of those. If you look at the lenders who have been around for a while delivering the products and are going to be around delivering the products in the future, they do take the customer on a journey. So they take the customer on a journey which starts with the rebridge, or starts with the bridging, and then, you know, moves into a term at some point when the exit is delivered. And, you know, there are a number of solutions out there, as I said, with and a number of lenders who absolutely get and understand what that need and what that solution needs to be from day one.
Jodi, what's your opinion on the headline timescales at the moment becoming more problematic than promotional from a legal perspective?
Yeah, I think it doesn't take into account the complexities that, you know, that was mentioning earlier necessarily. You don't know whether that headline is about a rebridge, whether that's standard. I mean, everyone puts the best foot forward when it comes to publicity, but is that always going to be achievable? Probably not. You know, it's not realistic. And if that then becomes an impression of what the norm should be within short-term finance, then no, it doesn't work. It doesn't help. Surely what's more important is the borrower's needs. You know, you might have borrowers that are saying, yes, I want this, I need this short-term finance, but actually I want to complete on X date. Surely we should be dictating the timescales around what the borrower needs and wants and what the transaction needs and wants, rather than just a benchmark of, oh, 2 weeks sounds great, you know. And I get that 2 weeks on certain products, on vanilla bridging, that kind of thing, that might be the ideal, but it's not always the case.
I mentioned it early on before we started the discussion as well. You know, if every broker was asking for, you know, an ASAP bridging loan, then it's going to cause backlog for the loans which do actually urgently need to be completed quickly. So Harry, do you think we should be basing metrics on what a borrower wants rather than what can be achieved? And also, as well, with is what a borrower wants what they actually need? How do you differentiate?
Yeah, is everyone happy for me to answer this question first? Look, I think at the end of the day, it's always about what the customer wants. Yeah, we're all FCA regulated businesses at the end of the day, so treating customer fairly always has to come top of the agenda. And yeah, I mean, here at Enterprise, when we're working with brokers, we will say to them, look, we know that bridging is not your core product that you deal with every day. It is ours. Would you like us to speak to Mr. and Mrs. Smith directly and ask them the questions? And invariably they say yes. And you get the trick, because every broker wants it done yesterday. But absolutely, it's about finding out what the customer wants and what they need. And then when you explain to them, sometimes you explain to them the process of what they need to do to get it done within a week, and it's not physically possible for them. They've got to go and visit their solicitor at their office. And then they might realise that they live in one city and for some reason their solicitor's in another city. They're like, oh, well, I can't take a day off work to go and see my solicitor. So you've got to sit down and explain to them all the permutations about them, and then really get under the skin of a case of a particular application and understand what the customer really needs. And like you say, yes, then say, well, look, you know, a week for your circumstances is not achievable, a month is, or 3 weeks is, or whatever it may be. But it does go back to the very beginning, speak to the customer, ask them directly what they want, and then tailor your service around what they need.
I have got a question from the audience talking about more prominence being placed on the exit in recent years, which means that packaging and underwriting bridging loans is taking much longer. Are there ways that this can be sped up for when time is urgent? This might be one for Emily to discuss.
I think at Precise, you know, we are always very, very kind of specific on what the exit is. We want to know what the exit is. We want to make sure that it is genuine and that the bridge is going to leave us within the time. So I don't feel like that is something that we can kind of compromise on. You know, that we won't do a rebridge. So we do want to make sure that, you know, when we take a bridging deal on, I think it's, you know, it's treating the customers fairly, that we know that they can leave us in the time scale. And that's really important.
Oops, sorry, I think the audio just went there.
on mine, did it?
No,
Oh,
mine.
No,
okay, sorry.
I think, Beth, I mean, along with the, you know, the security and the LTV, the exit is the most important thing, I would imagine, for the lender. And if we're acting responsibly as we always would, then, you know, the exit is absolutely prominent. So I think certainly any kind of engagement we'd have with brokers, it would be understanding that exit and the circumstances taking us towards that exit is you know, would be absolutely paramount during the conversations we have.
Jodi, what advice would you give to any brokers and borrowers as well, in terms of how things could be sped up from their side?
I think, as we've mentioned several times, accuracy from the outset. You know, there are going to be certain things that need to be satisfied, which are non-negotiables, like, you know, AML, KYC, ID, that kind of thing. If brokers can assist with that, especially if they're regulated, as our partners on here are, great, you know, that's brilliant. Solicitors are not always proximate to their clients, so that needs to be taken into account, as Harry's mentioned. But really, communication is the key. You know, if you've got a deal that needs to complete and is genuinely urgent and has a deadline on it, just tell us from the outset in terms of legals. You know, Precise are very good in terms of instructions on that. So as long as everybody's clear what the goal is, there might be a couple of things along the way where, you know, there'll be things that we need help with from the brokers if the client's not quite grasping what we need, and legals. But if we all know what the end goal is, then it should be easily achievable.
And then just finally, some final thoughts from each of you. I'd like to go around each person just to find out whether or not you think that timescales is an issue at the moment, and what you'd like to see going forward. I think you've all mentioned that, you know, you're all getting the money for your clients in the time frame that they need it. So would you agree that timeframes are not a problem right now, or do you still think that there are improvements to be made? Rob, do you want to go first?
Well, I suppose it had to happen eventually, didn't it? Yeah, okay, so yeah, timescales are not a problem with our firm. That's all I can say. I can't speak on behalf of the entire industry with any authority, I guess. So let's speak with no authority and say I think timescales are a problem for the industry per se. Present company clearly excluded. So you know, and it comes back to all the points everybody's made, which is short-term lending and bridging is a wonderful product for the right customers. It makes them huge amounts of money, allows property professionals to recycle properties, upgrade, and to make huge profits. But with the wrong type of customer, it's like crack. It is just horrific, and it can totally mess a customer up. It can be totally inappropriate for a customer to have a bridging finance loan when really they don't need it. They could have a term loan or a commercial loan, and that's why I think it needs to be really understood. If you don't understand it, pick up the phone to a specialist distributor, obviously on the alphabetical order with the three of us, and you know, ask the question, and you know, your commercial terms will be great. You'll not have any reputational damage with your customers moving forward, or introduce a scenario. But let me leave you with this. In complete contrast, if you do it badly and you go to a lender who's going to rip your customer off, and the best crooks have always got nice smiles, haven't they? So don't be put off by a strappy headline or a false promise. They strike your client up. They cost your client their home, their investment. You are going to be in significantly hot water. So bridging is brilliant. It's absolutely, it's the nicest cocktail in a drinking capacity, but it will turn poisonous if it's the wrong lender, the wrong term, the wrong partner that's selected. And I'm sorry, every day across all of our desks, I'm sure we see some road traffic accidents, and you go, oh my God, you know, we've come such a long way in such a short amount of time in this industry. It's better than it's ever been, but there's still far too many morons out there who clearly haven't got a clue what they're doing. The end.
I mean, I think just on that point, I saw a case last week which came into us where it was a 2% fee into the arrangement. It was 2% out of the arrangement, and the client was going to be charged 1.49 a month. All three of us have got lenders within our panel, where rates are starting from 0.4, maybe 1% fee as an exit, and it just proved the importance of selecting your partners right. And this poor broker was, you know, it was within a couple of hours of actually signing this client up to a deal which would have cost thousands upon thousands. And there's just that naivety, and there's just that lack of understanding there. And look, as a product, it's no different to other product tools that we've got in our toolbox. You know, brokers want certainty of decision. They want to understand what needs to be sent with the application, and they want to know what the timeline is. And you know, we've mentioned the communication point, but we should be able to deliver those three valuable elements with a bridge fairly easily.
I think that worry comes down to the fact that there isn't a huge amount of data in the market, and while that the amount of education has increased and the professionalization of the industry has increased, we are attracting more mortgage brokers into the market, and brokers who potentially don't have, you know, any qualifications or anything, and they're not needed at the moment in an unregulated sphere. And we'll definitely be talking about that this week at the FP show. So that's something which we can continue this discussion. Emily, do you have any final comments from you before we bring the discussion to a close?
I think Jason and Rob have probably nailed it. And as I said, I did mention at the beginning, you know, we're more than happy to take business from a number of different avenues. But, you know, you may, even if you don't, you know, if you're not comfortable doing bridging, or if you don't feel like you understand it, that doesn't mean you're a moron. It just means that you're making a responsible decision not to do it. Then absolutely refer it through one of our preferred partners, and we have a long-standing relationship with them, and we are confident that if Precise happens to be the best deal for their clients, then that is the deal that they will recommend, and if it's not, then it will go to another lender. And from our perspective, you know, we've made some big changes to the lending policy this year, and I hope that we'll see more, and I hope that we will branch out into a lot of other areas which will hopefully provide solutions for more clients going forward. But thank you very much to you for organising today, Beth.
I say the morons are the ones that go into the electricity switch with a screwdriver sitting in his cabin
whilst they're high on crack, those ones. They're
the ones that try and do it themselves. The ones that pass it to someone that can do it really well are professionals, are professional advisors, and thank the Lord they outnumber the morons by quite a lot.
Thanks for that, Rob. We've just hit 12 o'clock, so I will need to kindly bring the event to a close. I just want to thank Precise Mortgages for partnering with us on this event, and also thank you to our fantastic expert panel for taking the time out of your busy schedules to be here. And I also want to thank you, our audience, for joining us. We will be publishing this roundtable in full on Bridging Commercial next week, so please do look out for that. And that's for anyone who didn't make today's live event or would like to rewind and listen to some of Rob's comments. If you enjoyed this one, we are hosting a number of exciting panel discussions in real life at the Finance Professional Show this Wednesday at London Olympia. You can register and attend for free. Details are on the Finance Professional website and also on Bridging and Commercial. So please do register to attend if you'd like to find out more about things like bridging qualifications. Also, for even more insight and news on the specialist finance sector, please check out our latest print Bridging and Commercial magazine on our website. This issue is all about sustainability and green finance, something very topical right now as we are in the COP26 summit. In the meantime, I'd like to wish you all a fantastic afternoon, and we hope to see you more at the show this week. Thank you very much.